Thank you. All right, thank you, Kim. Very exciting. We are now in our new office location, the Lifetime Works building in St. Louis Park. We officially started there June 1st. And moving forward, our team will operate with a hybrid fashion. So we'll be available for in-person meetings, available for phone calls, available for virtual calls, as we've all become more and more accustomed to that over the last year. So starting the week of June 14th, we will be available for in-person meetings. And so if you'd like to get us something scheduled, simply reach out to us and we'll get something on the calendar to meet you once again in person, as it's been a very, very long time.
Yes, it has been a long time since we've been meeting with people in person. So that's exciting that we can get back to that. All right, as a reminder, feel free to start asking us questions and you can drop those in the Q&A chat box. But we'll go ahead and let Anthony start us off with our second question today. How will the proposals from the Biden administration's first 100 days affect me?
Yeah, well, great question. Thank you, Kim, and thank you to everybody for being here. By the way, I see a lot of familiar names in the attendees list. So thanks for taking a little time. How long do you have? I could take up the whole hour talking about the answer to that question, but to keep it brief, we're proposing, and by we, the country, the executive branch, and probably followed by the legislative branch, we're proposing to spend a lot of money here, right? That's what those Biden proposals, whether it's the infrastructure, the education, and even the Republican counteroffer to Biden's proposals are spending a lot of money. They have big price tags. So first off, there's a couple different variables to think about here. There is what actually gets done and what actually gets passed through the House and the Senate and becomes law. That completely remains to be seen, right? We don't know what form, if any, these proposals, and again, the infrastructure being the top of my mind as I'm talking about this, we don't know what form those are going to take. So it's a little early for me to speculate, okay, this is going to happen and that's going to happen. But let's talk about a few what ifs and then I'll kind of put a bow on it. The what if number one is, okay, if we're raising expenses, theoretically, we need to raise revenue to counter that, right? And that's where we potentially see higher taxes also being proposed as a corollary to these spending proposals. That would be a safe bet that those are going to get proposed. Again, whether they get through or not remains to be seen. By the way, I just had a conversation with a client about this earlier in the week, or actually last week now. The market, to my estimation, has not really made a huge move betting on this happening or not happening. It seems to be a little bit of a wait and see as far as how this all shakes out. So specifically how it affects the market, that remains to be seen. One other big thing that I want to hit on is inflation. That is the hot topic of the day. When you propose a budget that spends trillions and trillions of dollars, you add money into the economy, all that money flying around tends to make prices go up. And actually, the tight labor market that we have right now tends to make prices go up too. So that's one thing we really need to watch for, because we don't want that to get out of hand. Now, at the moment, the Federal Reserve has said we've seen a little bump in inflation, but that's purely pandemic recovery. That's normal. We would expect that as our economy kind of grows back out of where we were over the past year. So I'm not worried about inflation yet. But these proposals historically would be viewed as inflationary. And why that's important, by the way, inflation is just prices going up. Your gas gets more expensive. If you're buying a car, houses, everybody knows what's going on in that market right now. Prices go up. Why is that bad? Well, it's not necessarily bad, but it's just something we need to take into account as we build out your plan or think about your investments, because we've got a plan for things that you buy right now being more expensive in the future. That's why we need to make money now to judge for that. And we need to watch very closely how these proposals may affect that growth rate of prices. Now, to put a bow on this, I'm not worried about it yet. There's a lot that remains to be seen, but I am monitoring it very closely. We all are. That is one of the big ticket items that you're going to hear more and more about as the year goes on. Inflation will be the word of the day. And I just want everyone to know that we are watching it. We don't think, at least as things stand right now, that it's becoming an issue. But as these proposals inch forward, including all the good things that they would potentially add to our economy, we need to watch out for side effects too. Now, I'm not going to make a political statement on whether we think it should pass or not. We're kind of just, hey, what are the results going to be and how do we work off of that? But from our standpoint here, I don't think these policies as proposed are disastrous. I also don't think they're going to get through in any way, shape, or form like they've been proposed. There's going to be compromises. And until we know what those compromises are, I can't give you the full roadmap of what the effects are going to be. So I wanted to give you a sense of what we're watching out for. And then from here, obviously, as policies get more and more clear, we will continue to keep you updated on what our latest guidance is for, hey, how might this affect the market? How might this affect the economy? For right now, I think we're still doing very well. The pandemic recovery is going strong, and we just need to see what happens legislatively before we can react to it. So long-winded, but you know me, I always talk long.
Well, thanks for that answer, Anthony. So it really just sounds like the proposals from these first 100 days, really, they're not going to look like they're exactly proposed, and the impact on them is going to just depend on what's happening in the economy and what's going on. And so how it affects you individually, it's really undetermined at this point because we just don't know what they're really going to look like. Cool. All right. Well, Jeff, I got my third question for you here. How is the move to Cetera going to affect how you advise me?
Well, it's going to give certainly myself, Anthony, Eric, our advisors, the opportunity to have a broader array of solutions available to you. We're going to be reaching out to you because one of the things that comes with joining Cetera is what we call a client portal. And that's just a fancy way of saying an easy way to log into your account where everything is consolidated in one area. And it gives you an opportunity to monitor your equipment as you feel it's appropriate to do so. The choices, as I indicated, are going to be more substantial. To give you an idea whether this is a good thing or a bad thing is open for interpretation, but we even have access to funds that contain Bitcoin now. And like I said, good thing, bad thing, it's a thing. And, you know, our office operates under the mentality that we have more than one tool in our toolbox. So we don't treat everything as if all we have is a hammer and everything deserves to be pounded. Other things are going to be much more nuanced, and we want to assemble our solutions in a fashion that's going to best support what you're looking to accomplish here. So we are terribly excited about moving to Cetera, which is going to happen as of this Monday. Just to give you an idea, we as an organization were invited to make this change back in March. Kim, who some of you may have met peripherally, is our operations manager and just our do-all for our organization. She is incredible. And as time goes on, I hope each of you gets a chance to meet with her because she is a tremendous resource. But over the last several months, we've done our due diligence to make sure that this was best for each of you. We believe that's the case, and we are incredibly excited to be moving into our new relationship. It's bittersweet saying goodbye to Voya. Prior to that, ING, prior to that to Aetna. I certainly have the longest tenure, going on my 37th year. But change is good and change is exciting, and exciting in a good way. And we can't wait to bring to bear all of the new opportunities that our relationship with Cetera is going to bring to all of us. So I appreciate the question.
Yeah, no, I thank you for the answer, Jeff. And I think just to kind of summarize that, the move to Cetera and how we advise our current clients, really nothing should change. We're still going to be there for you all. We're still going to answer your questions. You know, the advisors are going to continue to help make your financial future a success. But like Jeff said, we're getting maybe some exposure to some newer tools and more solutions and different things that we can add to our repertoire of what we can help with and what we can do for everyone. So that's just awesome. As a reminder, the Q&A session and Q&A chat box at the bottom of your screen is where you can type in any question you want. No question is silly or too small or insignificant, so pop them in there. You could even ask Anthony like when he's getting married, and you can ask him anything you guys want. So just pop them down in the Q&A, and otherwise we'll just keep going. And so Anthony, my next question is for you. What should I know about taxes moving forward in 2021?
Yeah, well, for now, the taxes are the same as far as what they were last year. I mean, besides our little yearly incremental bumps to the standard deduction or whatever. But going forward beyond that, I think the big year to watch out for is 2024. And that is the year that the tax cuts that were put in place back in 2017 are set to expire. So one of the things we need to think about as a collective, and certainly we're thinking about it in our offices, okay, for the foreseeable future, and the foreseeable future is always changing, of course, but for the foreseeable future, the next couple of years may be the lowest tax brackets we have for a while. May not be a huge change, and it may be, it may affect some people more than others. The theory is that the proposal will only impact, the new tax proposals will only impact the highest earners on the spectrum. But regardless, we need to prepare for the idea that taxes may go up in the next few years. So as you're thinking about your taxes, one of the things we need to think about is what about how do your investments, how does your entire portfolio, how does that fit into your tax situation? For example, if you worked for a long time and you have your retirement account, whether that's your 401k, 457, 403b, or if that eventually got turned into an IRA, that is all taxable money. We need to make a plan, at the very least a plan, even if we don't change anything, a plan for how to best utilize that money to suit your needs while not paying any more taxes than we absolutely have to make that happen, right? Well, we're all about paying our fair share, but we don't want to pay anything above our fair share. So we want to be aware of all the rules. We're certainly going to be on top of the changes that it comes. And actually, this is an exciting time. We have the capability, and it's once we transition at the end of this week, it'll be very shortly thereafter live, to actually analyze your tax returns. We have a service called Holistiplan. It's a very well-known and widely used service at this point. It's really caught on. And all it does is it analyzes your tax return, and it basically scans it in and says, hey, these are the different things that we could be doing to make a difference as far as your taxable income, perhaps, or just, hey, you should be saving into a Roth, not a regular IRA, or you should be doing conversions from an IRA to a Roth. And I won't go into the details of exactly what that means. And I've talked about conversions before, but it's a way to move money from an IRA to a Roth. And just to give you the example, an IRA, money goes in, hasn't been taxed. Money comes out, is taxed, like income, like you're getting a paycheck. Roth, exact opposite. Money that goes in, already taxed, like income. Money comes out, not taxed at all. And so it's a very attractive thing, depending on how the rates are now and how they are in the future. You can start to see, okay, I can think about when would it be better to do a Roth or an IRA. The good news is you can put money from an IRA into a Roth, and whether you want to do that is completely up to your own situation, so I won't go any further there. But basically, as we look ahead to taxes, I think taxes are probably going to go up. By how much completely remains to be seen. And that's one of the problems when you're dealing with political issues, when it comes to economics and finance. You just don't know until it happens. So again, something we're watching very closely for this year, other than the stuff we've already been doing. I think, if we've sat down and had a conversation about your taxes, a lot of that information is still going to hold.
Awesome. So just kind of to summarize that, Anthony, really in terms of what do we need to know about taxes for 2021 is nothing is going to change for 2021, but there are proposals and conversations happening during 2021 that could potentially affect us in the next year.
Right.
And so we just need to continue to have conversations with our advisors, our trusted CPAs, and just stay on top of what might happen here come 2022. Awesome.
Yep.
So we did get a question. So I appreciate that. Thank you very much. And this is from William. I'm going to pass this one off to Jeff. So will there be any changes concerning AssetMark in regards to the move to Cetera?
The answer is no. It should be completely seamless. AssetMark continues to be an excellent partner for our clients such as yourself and for us as an organization. Reason being is that in today's world, the active management style has proved to be an excellent solution for the people that we work with, for yourselves. We find that from a administrative standpoint, the ability for us to get you money when you request it, to have different administrative functions taken care of in a quick, efficient manner. They are top notch. And again, that may be kind of an internal statement on my part, but I can't tell you, I will tell you how pleasant life is when I don't have somebody like Margie or Kim coming to me and telling me how aggravated they are with somebody that we're working with because they're not coming through for you. And we don't find that with AssetMark, and that is so valuable to us and to you, we believe. So one is that I believe that almost all of you, if not all of you, will find that your statements are performing above expectation. And for each of you, as we sit down for our reviews, we'll make determinations as to whether the allocations are still appropriate or not. But our opportunity to continue to select different management styles, and then when we combine them, give you that risk reward type of profile, which means that we're taking as little risk as possible and squeezing out every last bit of return that we can, is just a win-win. And so we're very, very pleased that we have this opportunity to work with somebody like AssetMark.
Great, thanks, Jeff. So I think just in short, for all of you that have accounts that we have thought would be a good fit with AssetMark, there will be no changes and you don't need to do anything. We will continue to be your advisors and continue to work with AssetMark into the future because, like Jeff said, they're a great partner to have for you as our clients. And Eric, I'm going to pass this question off to you that we got in the Q&A chat box. So thank you, Judy. If I have a stock and a Cetera account, would you take over administering that?
Thank you, Kim. Thank you, Judy, for asking that question. That's a great question. So there may be questions similar to that. Just, okay, how does this all work? So the accounts that we're currently working with for you, those will be transitioned. And so over the next couple of days here, we'll start making that transition where you're still working with Stein Financial Group, but then instead of being through the Voya platform, it'll be through Cetera. So then the question is, well, what if I currently have something at Cetera? So in that scenario, similar to all the other times we work with our clients, send us a statement so we can take a look at that and we can provide some guidance on what's going on with it, what are some potential recommendations, and how could we help in that scenario. But if that's something you currently have at Cetera, just because of our move to Cetera, we do not automatically take that on for you. So we want to make sure we can do the due diligence for you and make sure we can provide value for you in that way.
Yeah, great. And so I think to summarize, Judy, and for anyone else who has a similar question, your accounts from Stein Financial are moving with us to Cetera. If you happen to have accounts at Cetera and you would like us to take a look at potentially overseeing and advising on those accounts as well, like Eric said, we would just need to do our own due diligence, take a look at those statements, and then together make a decision if that's a good course for you. And then we would be more than happy to help continue to take care of your accounts that are potentially already at Cetera. All right, well, keep those questions coming, guys. Great, just keep dropping them in that Q&A chat box. Otherwise, we'll continue moving on here. We'll pop back over to Anthony. The markets keep going up. Should we expect a correction soon?
Great question. And even before I get to that, I'm going to piggyback off of Jeff's question, just to let people know, because I know I've been having this conversation. This is a very common question. What exactly is changing as we move to Cetera? First off, you see on my screen, it still says Stein Financial Group right above my finger, right? That is not changing. The names, the faces, the most important face that's not on this call, or at least not on the video of this call, Margie, you can see, or she's in the audience right now. She is not changing. What is changing? Our phone number, our location, both of which I think are improvements. Our phone system is I think a lot nicer than our old one. And our location I also like a lot better. And as after that, you're going to notice new stationery and new business cards, but your accounts are going to stay the same. You're not all of a sudden going to see us, say, hey, I've got a lot of great Cetera mutual funds that I think you should check out. That's not how it works. We still have the option to go wherever we think is best. We're not incentivized by Cetera to sell this or that, or to steer you in a particular direction. It's all still about what's best for you. So I've gotten that question a lot. Okay, tell me exactly what's changing. Phone number, which by the way, if you haven't gotten our email, we've sent out some emails and mailers about it. 612-895-5400 is the phone number. 612-895-5400. And when you change, you can't say that stuff enough. So I just wanted to get that out there because some people have said, okay, well, you're not my point of contact anymore. Or if I have an old Voya account, can we still talk about it? The answer is yes, we can still talk about it. Depending on what type of account it is, we have to play by Voya's rules and all that stuff, but we'll get into that on an individual basis. I just wanted to go there. Okay, now to the actual question that was asked of me. Markets keep going up. Do we expect a correction soon? The answer to that question is always yes. We always somewhat expect a correction just because probabilistically they happen fairly regularly. I mean, a correction happens usually once every 3 years. By the way, when I say the word correction, classically a correction would be a 10% drop in the market. You can also talk about bear markets. Usually they use a 20% number for that. It's all just kind of, they use different terms to measure certain drops in the market. But basically the question is, could a drop in the market happen this year? Absolutely it could. Probability wise, we've been on a great run other than the pandemic, that dropped us down and then we shot right back out of it like a rocket. That being said, even though it can happen, I'm not necessarily expecting one for the rest of the year. And let me tell you why. The reason I'm not expecting it is we are still recovering, and we're a lot closer to the finish line of that recovery and then growing beyond it, but recovering from the pandemic economically. The market's already recovered. The market's front run everything, remember. So they saw this recovery coming, economically speaking, and they said, okay, businesses are going to eventually get back to open up. Eventually, we're going to be able to take the masks off and go back out to restaurants and events, and spending is going to pick up again. And they were right. The people who bet on that were right. And they bet on that all the way going back to last year. But we continue, despite what I talked about, some of the warning things, inflation, we've all heard about employment and the tight labor market right now. Gas prices are another thing we're watching. Despite all of those kind of blips on the radar, the news is overwhelmingly good, economically speaking. And that's why I believe for the rest of the year, the market is going to have a hard time choosing something to be really dissatisfied about and go down. That doesn't mean we're not going to have volatility. Don't get me wrong. We may see a couple weeks where the market goes down 3, 4, 5%. Who knows? I mean, I wouldn't be shocked if we got into a period where the market was down 10% at one point. But I think what's happening is we are on an upward trend purely because the economic news that comes out every week is so good. I think the market is going to have a tough time being so dissatisfied about something. That's kind of my outlook for the next 12 months or so. Now, when you get to 18 plus, then we've got obviously, as these proposals that I've talked about, whether they get passed or not, as they come through or not, we need to pay attention to that because that will have a big impact. But B, that's about as far as I predicted any one time anyway, 12 to 18 months. I mean, things change so rapidly. The short term is completely unpredictable. I mean, whether the market's going to go up or down today, that I don't know. But in the near term, over a period of months, I do still feel good. Now, if you would give me where the market's at today and you say I could lock that in for December 31st, I might take it. But that doesn't mean that I'm here to tell you to sell today either, right? We need, it's time in the market, not timing the market, right? So I do believe that we are set up for success for the rest of the year. That being said, now is also not the time to go mortgage your house and stick it all in the market, right? The market's high. We need to A, examine your risk, and B, know that we're investing for the long term so that whatever those short-term blips are, if we do experience one, we can say, it's going to come back. We have a strategy. We have a plan. I didn't feel all of that anyway. And I think we're good to go. That's always our goal when we're looking at your money. And that's what I believe we're set up for. I think we're still set up for success for the rest of the year.
Anthony, isn't what you're saying really comes down to time and need?
Yeah, and that's a great point as I move my screen there. The point is, your situation will often determine how risky or aggressive or how much in the market or out of market or what your timing is, much more than anything I'm saying about the broad market here. First off, if you are recently retired or nearing retirement, or you've been retired for a long time, those are three different stages where we need to take into account how soon do we think you need your money? How soon do you need to be able to take it out? Because obviously we don't want to take it out when the market's down. So we need to build in a little bit of risk protection there for those needs. Two, if you don't need the money for a long time, well, then what we need to do is say, okay, we need to get you into a place where you're comfortable, but then we need to get this thing to grow too. And that may mean putting a little bit more in the market or a little bit, my point is this is going to be tailored to you individually.
Yeah, so I think, Anthony, just to summarize, and to Jeff's point too, need, timing is super important. Yes, the markets are going up. Like Anthony said, volatility is a thing. It's part of the market, and there will probably be a correction at some point. The way that the economy and everything is going, we don't expect anything like that in the near future. But when you should and shouldn't be in the market is incredibly independent on your personal financial situation and your risk tolerance. So it is a thing to watch out for, but it's definitely an individual thing. Gloria has asked us a question, so I'm going to pass this one off to Eric. How has security regarding accounts against hacking been maintained through this transition from Voya to Cetera? And then at Cetera, like what will be different or better in terms of security regarding our clients' accounts?
Thank you, Kim. Security is continuing to become more and more important every single day. And so while we were at Voya, while we moved to Cetera, becomes a top priority that we continue to make sure that your personal identities, your accounts are all maintained appropriately and safely and everything. And so between the encryptions and all the different computer securities that we have to have on our computers, everything that Cetera has on their side, and then overall, Cetera is a very large firm. They have a large investment in cybersecurity. And so we feel very, very comfortable that between what we're doing, between Cetera, your accounts will continue to maintain that same level of protection. And it keeps growing every day as cybersecurity becomes more and more prevalent. That's something we take very seriously, and it continues to be a high priority for what we're doing. So yeah, we'll continue to be maintained and keep becoming a top priority day in and day out for all of you.
Yes, thanks for that answer, Eric. And that was a great question, Gloria. I'm glad you asked that. We are pushing up to our half an hour here on our Q&A, so we could probably take one more question if somebody wants to drop that in the Q&A session. I can give you guys a second to pop one in there if you'd like. Otherwise, we'll probably just close it out today. If you have maybe a personal question that you didn't feel comfortable asking today, please reach out to one of the advisors. They'd be more than happy to answer that for you and help get you some answers. Or if you just like to touch base and visit with them, give us a call. Like Anthony said, we do have a new phone number. You can give us a call at our new number, which is 612-895-5400. All right, well, it looks like maybe we've gotten most of our audience's questions answered for today. So thank you, advisors and on the panel today, And thank you for all of your questions and for coming. So I think we have another security question follow-up, but like, why is Cetera any different than Colonial Pipeline or any other business or / government in terms of hacking and security? I'll let any one of you jump in on that if you want. Eric, Jeff, Anthony, if you guys want to follow up on that really quick.
Yeah, let's talk about security in general. First off, one of the things that was very attractive for us about this move is if you have an account with us right now, it is 99% of you going to stay not just the exact same with the investments. That's 100% of you, and the fees 100% of you. That's not changing for any of you. But also with the holding company that's helping us to manage it. So if AssetMark is a name that you know that your account's in AssetMark, that is not changing at all. We're still working with AssetMark. They still have the same great security that they had before with Voya. Pershing, if the name Pershing means anything to you, if your account was with them, and even if it doesn't mean anything to you, we can, if you're curious, hey, who is my account with? Please get in touch with us. We're happy to let you know. But first off, your accounts are with us, but then we use these companies to help allocate them and get the securities, the mutual funds, the stocks, the ETFs that you want to own. And those things, by and large, are not changing at all. If you were with Pershing at Voya, you're still going to be with Pershing at Cetera. So from a transition standpoint, this gets a little bit back to Gloria's question. The transition is going to be extremely smooth from a security, from an easiness standpoint. That was one of the very attractive things for us. Now, the bigger question about actual, in general, security. All right. And if we've learned anything in this digital age, I'd be lying if I sat up here and said, everything is 100%. There is not a chance in the world that something would happen. Now, what I can say is that the level of effort to get in to some of these systems that we use, that Cetera uses broadly, I mean, we're talking a level of effort not far off from getting into like a national government here. I mean, we're talking, we would need probably a state actor or something like that to really want to get into my retirement account, for example. So it's a touchy topic because there are no guarantees in life, right? But given where we're at as far as the state of the art security, given where we're at with the level of investment, as Eric pointed out, that Cetera has put into this, we are as safe, I believe, as we can possibly be here. And again, that is on par with any of the largest companies in the US. I mean, they're putting millions of dollars into security and safety here. And all we can do from our perspective, just like all anybody can do, whether it's digital or personal security, is prepare for every possible outcome you can see and make it as hard as possible for anyone who's looking to do wrong. And that's what I believe we're doing. And that's what I believe Cetera, if not even better than Voya. I mean, I think they're pretty much on a par. But if anything, they're better because their systems for these are a little bit even more updated than Voya's were. So I feel very confident in the security here. I'm not a cyber tech expert, but from everything I've seen and from everything we've looked at as we did our due diligence to make this transition, I feel very confident about the security here. There are no guarantees in life, but I'm as confident as we could be about it.
Yeah, so thanks, Anthony, for that follow-up there. And great question. Like Anthony said, security is of utmost importance to all of us in making sure that your guys' accounts and your personal information stays private and that no one has access to that. And it is a very relevant thing and a very relevant topic, just like you mentioned with the pipeline and everything else that's recently hit the news. It's definitely top of mind for a lot of people. So thanks again, everybody, for all of your questions. Thanks again to the panelists for asking and some great insight today. Reach out, email the new phone number, and then a recording of our coffee chat Q&A will go out after this. So if you want to re-listen to an answer or anything like that, or you want to share this Q&A session with anybody in your family or friends because you thought there was some great information and great questions asked, please feel free to do that. You can find the recording on our YouTube channel. If you're not following us there, definitely go out to the Stein Financial Group YouTube channel and follow us. You can get all of our latest and greatest videos. Of course, Anthony is our YouTube star, so if you love listening to his answers, you're going to see a lot of him out there. And then Well, it's hard for us to provide coffee for everybody this morning during our coffee chat. We did want to at least extend that idea of the coffee aroma to one lucky person out there today. So we're going to have Cecilia pop us up a little spinner here and see who our lucky participant today is. So we would like to gift them a coffee of their choice. So give it a whirl, Cecilia. Hey, Susan, congratulations. We will reach out to you to get you a copy of your choice on us for joining us this morning for our coffee chat. So thank you for doing that. And tell all your other friends who missed out on this opportunity for some coffee this morning to join us for our next coffee chat. We're looking forward to making this more of a regular quarterly thing. So you as clients, friends, and family can hop on here and just get any questions that you might have, any sort of burning questions regarding the economy, the markets, when Anthony's getting married. Eric just had a baby girl, by the way. You know, you can ask him about his life and what's going on. Jeff has been working on his golf game. You know, you can ask him anybody any questions that you want. That's what this coffee chat is for. So we look forward to hosting those about every quarter. So look forward to another coffee chat come September. And with that, thanks everybody for joining us today and have a great Tuesday.
Cannot wait to see you again soon.
Yes. Thanks,
Until
everybody.
next time.
Bye-bye.
Fun.